Global market presented a mixed bag with North and South American exhibiting contrasting trends. Starting with the US major indices that had a downbeat day, the Dow dipped 0.07%, shedding 29.51 points, while the broader S&P 500 saw a sharper fall, losing 0.43%. The tech-heavy Nasdaq faced the most significant hit, dropping 0.90% or 175.99 points as investors appeared cautious about the tech sector. On the flip side, small cap stocks represented by the Russell 2000 bucked the trend and egged out of a modest gain of 0.11%. Canada offered some relief with its S&P TSX Composite Index climbing 0.44%, supported by a 0.38% gain in the S&P TSX 60. This growth hints as investor confidence in the energy and resource-heavy Canadian market is on. In South America, the story was split. Brazil's Bovespa dipped by 0.33%, losing 393.07 points, signaling concern possibly tied to commodity prices or regional economic challenges. However, Chile's S&P IPSA rose by 0.21% and Mexico's S&P BMV IPC soared by 1.38%, gaining 638 points, suggesting positive momentum likely driven by strong corporate earnings or optimism around trade relations. These movements paint a complex picture of investor sentiment reflecting a combination of cautious optimism and localized concern. Stay tuned as market participants navigate these evolving dynamics. In the energy sector, both WTI crude oil and Brent crude oil experienced significant gains. WTI climbed by 1.23% to $72, while Brent rose by 1.21% to $75.54. These increases reflect growing optimism around the energy demand, possibly driven by improving economic indicators or geopolitical development affecting supply. Natural gas also joined the rally, inching up 1.26% to $3.14. This gain may signal seasonal demand pressures or changes in the global supply dynamics. Switching to precious metal, gold ticked upward by 0.41% to $2,651.90, continuing its role as a safe haven asset amid market uncertainties. Silver outperformed gold, jumping 1.36% to the $29.64, driven by industrial and investment demand. In agriculture, soybeans were the only commodity to see a decline, slipping 0.40% to $10. The dip might indicate easing concern over crop shortages or weaker than expected export demand. Overall, the commodity market showcased a mixed gain in energy and metals, offset by a minor loss in agriculture, with the energy sector setting the pace. The commodities space remains dynamic as traders react to economic and geopolitical